are listening to Fast Track Podcast, the place to be to fast track your personal finance or fast track your business, or both, through a series of conversations with those who have learned it, done it, and made it. Hello everyone, today my guest is Julian Liniger. Julian Liniger was a management consultant and he started two companies in the past, one in 2018 and the other one is called Relai in 2019 since January, February. And recently Relai also closed a Series A round funding with the worth of $2.7 million US. And if you are interested in cryptocurrencies and Bitcoin, you might have known or you might have heard about Relai. If not, you should listen to this episode. Let's welcome Julian.
Hi, Yazi. Thank you very much for having me. This is awesome. It's going to be fun.
Yes, and also it's very spontaneous, but I like spontaneous, make it more exciting. And very glad to have you here, Julian.
Exactly. Where was it? Yesterday that we chatted on Twitter, and now like 12 hours later, we're sitting on the call.
Yes. For the audience who are not from Switzerland, just to let you know, spontaneity does not exist in Switzerland.
It's better. It's getting better with the young generations, but for like the traditional Swiss people, yes, they need to know, 1 week ahead when is the timing, and then they're 15 minutes before, and then they get ready and everything. So yeah, usually this does not work. Yes, with most Swiss people.
But here we are. So today I will ask you a lot of questions about how you founded Relai and Bitcoin investment and all your personal investment and money philosophy. And let me start with the first question. So Relai is like upcoming and it's growing so fast. Recently you closed Series A round funding. And what made you start this company at the first place?
It was a mix of a personal problem and a problem that I observed in a lot of people that I liked, like people in my environment. And the problem was it was not easy enough. It was too complicated to invest in Bitcoin. Like myself, I wanted to have an easier way. I was invested in Bitcoin for quite some time, like since 2015. But I wanted to have it easier, especially also to set up a savings plan, because I was on a weekly or a monthly basis, I had to sit down and wire money somewhere to an exchange and then exchange it to Bitcoin and withdraw it to my wallet and everything. So I did this on a regular basis, weekly or monthly, and I wanted to have this automated. But there was no way to automate this easily. So this was kind of my problem I wanted to solve. But also I observed a lot of people that had issues getting into Bitcoin, like people who are not tech or finance savvy, but just normal people like my mom or friends of mine who worked as on a construction site or as hairdressers or whatever. They wanted to get into Bitcoin, but it was just way too complicated for them. So I wanted to make access to Bitcoin very easy and smooth for everybody. Basically, that was the big problem I wanted to solve, and there, in my opinion, was not a nice solution back then.
Right. And I remember back then, I think I bought my first Bitcoin on Bitpanda, and like transaction fees were extremely high. Then you have to know where to transfer to, and it was a little bit complicated. Mm-hmm. And how did you start it with crypto investment or Bitcoin investment? Where did you hear about this?
I first heard about it in 2015, beginning of 2015. I was never really a tech guy, but I was very interested in finance and stock investing, stuff like that. So I was always on the look on new alternatives to invest in. And my friend, he was the exact opposite. He was a very tech guy, but he didn't have any idea about investing. And so he told me, hey, there's this cool thing called Bitcoin. It's like internet native money. You can send value around basically without a bank. It's like the internet of money. It's pretty cool. You need to check it out and stuff. And then he showed me, and I initially really thought, it's a cool thing. It might go away again. It's probably an experiment. It's very speculative, but it's interesting. So let's try. So I bought a Bitcoin for like $500 back then. I didn't really go deep into the nitty-gritty details, so I didn't really understand it. I just thought it's an interesting speculation and short-term, experiment. And so I invested, and it went up, and I sold again, basically. And then from there on, it didn't really paid much attention. for another 1 or 2 years. I obviously followed it a little bit, but was not really into it. I had other priorities, was studying and stuff. And then 2017, beginning of 2017, again, I felt like there's more and more interest also in my environment about this, and people were starting asking me because I already kind of knew a little bit about it, and asking more and more, and got excited about it and wanted to invest in it. So then I was like, okay, this thing is probably not gonna go away anymore. So I probably better dig deep a little bit and then understand it better. Back then, it was then already more than 1K per Bitcoin. It doubled in 2 years. Well, there must be something behind it. And then when I really did my research and homework and really understood it better, it was clear to me that this is revolutionary shit and this is very, very cool. And I want to spend more time with it in my leisure time, but also in my professional time. So then 2017, I invested more of my money. Obviously, 2017 was good year for all Bitcoin investors. And so by the beginning of 2018, I then decided I want to do this my profession. I really want to devote my career to this.
Okay. And did you again start or you didn't this time?
No, since then, I really didn't really sell a lot. Since then, I basically tried to accumulate more. But what I did is I did a lot of speculation with different altcoins, shitcoins, ICOs, DeFi stuff. So I did a lot of experimentation. So I made a lot of money, lost a lot of money. This led me now being kind of a Bitcoin maximalist. So right now I'm really focused on Bitcoin a lot in my investments, and I think this is really what makes sense long term. So I didn't really sell, but I speculated and lost a lot of money there. And I also spent a lot. So for example, for half a year that I was spending in Silicon Valley, studying at a small university for a semester in California, basically financed my whole stay there with my Bitcoin earnings, basically. But no, I'm not selling, only if I really need to, but this is very rare. I am more in accumulation mode. I try to buy more and more every week.
And I can really relate to that. I think in 2017, I also did a lot of experiment with Bitcoin and the trading with other altcoin or shitcoin. And then in the end, I did a math. In 2018, I just did a math. If I don't do nothing with my Bitcoin, I might have earned more.
Correct. It's really just buy and hold and buy more. And then it would have made sense the last 10 years, for sure. People get tricked into, short term, I can make so much money with this ICO. No, this DeFi thing gives me 10% annual return, so I should probably do that. Obviously, people are attracted to this. But in the end, as you say, this is completely right. Probably if they would just stick to Bitcoin, buy and hold and accumulate, so buy some more with the savings, like automated savings plan every week, then for the last certainly 2, 3, 4, 5, and up to 10 years, this would have been the best investment strategy, probably.
Yeah, actually, it applies to most of other investment as well in traditional finance. If you do dollar cost average, this is like one golden strategy. And then buy something is proven, and then you diversify with time and diversify with the price in the market, and then over long term, like most of the time, yeah, for sure you will make a profit. And I have a question related to dollar cost averaging method in your app, because one of the key functions in Relai is to allow people dollar cost averaging Bitcoin. And what is the reason behind the design of this?
It's exactly what you said. It doesn't really matter which asset, be it a traditional asset or a crypto asset or Bitcoin or whatever, and even gold or stocks, whatever. It always has been in the last couple of decades the best investment strategy to just take a certain amount that you can afford per week or per month. Ideally, it's best to have a short time period, so daily would be ideal, but weekly is almost as good, or monthly. And then just invest this amount of fiat money, like US dollar or euro or Swiss francs or whatever your currency is, at a certain time and in a recurring fashion. So for example, every week into this asset. This has been proven to be better than basically any actively managed strategy, or there's so many algo trading kind of fancy things. But on the long run, it has been proven to be most effective to just do dollar cost averaging. And that's why we really wanted to support this, because a lot of people are, especially in Bitcoin, but in investing in general, are looking for this because they learn about the strategy and it being so simple and yet so effective. And it also makes sense, if you think about it, you're investing in, on the long run, in a volatile asset. So the price might go up, might go down, and you will never be able to really buy when it's low and sell when it's high. This is obviously the ideal, but it's never going to work on the long run. Maybe you get lucky for a week or two, but in the end, you will always win and lose. And then in German, we have this proverb called hin und her macht Tasche leer. So that means the more you trade, the more actually you lose in the end, because you can never pick the right moment. And with dollar cost averaging, it makes sense that it works, because if you invest the same amount every week, then one time the price might be higher, then you're automatically buying less of the asset, and one time maybe the price will be low, and then you're automatically buying more. So in the end, you will have the best average price. The longer you do this, the more effective it will be. And if you assume that in the long run, the trend is going up, then you accumulate more and more to the best price. And this will make you wealthy in the long run. So that's really kind of a magic strategy, especially with Bitcoin, because it's a deflationary asset.
And then you mentioned that you have the problem, you want to buy frequently, but there's no easy way to do that. In the development of the Relai app, have you thought about just allowing people to buy and trade cryptocurrencies? Or that's from the very beginning, the principle is to focus on dollar cost averaging? Because many apps are about buy, trade, buy, sell cryptocurrencies.
Yeah, that's the interesting part. We really came from just allowing a savings plan, just only the dollar cost averaging tool, because we also thought, there are different other, like Bitpanda you mentioned, you can trade all the cryptocurrencies, that's fine. But then we also very quickly saw or understood that a lot of our users also wanted to do single buys. So they want to do both. They want to set up their, let's say, $50 per week and then let it flow. But also whenever they think it's now a good price to invest some more, or for example, they get a bonus or a pay raise, or they have some money by the end of the month that they want to invest, they also want to do a single buy. And they also want to sell from time to time because, they need to pay bills, they have an emergency or whatever. So that's why we also wanted to have this kind of trading tool, but we're definitely not set up for like the high frequency traders. Then you're better off with your Bitpanda or Kraken or traditional exchange. It's also way more complicated though. So for us in our app, everything is very easy, but it's really more for the long-term investor who wants to have peace of mind. And the cool thing is as well, where we differ a lot, is that we don't have all the complicated and cumbersome user onboarding like you have in other exchanges. So with us, you can really start within 1 minute. You don't have to create an account or get registered or verified or anything. We don't even require your name or other personal information. You can just really start, and it's very easy. And that's why people are using us. If you want to do like a lot of trading with different cryptos and stuff, and then there are other solutions for that.
I see. So Relai is designed for people who want to invest long-term and then using dollar cost averaging method. I like simple finance. Investing is simple. I would say investing is easy and also should be simple. But to stick to it, it's not easy, because when it fluctuates and then people start to panic sell and react to it, and it's most of the time you will incur a loss. So for those who really understand long-term investment, I think dollar cost averaging is the way to go. Don't worry about it. Let your bank and Relai do the job. And then 5 years later, 10 years later, you look at your account again, maybe with surprise.
Yeah, exactly. And this is exactly what you say. A lot of problems basically, or losses, incur when people get emotional with investing. And that's why it's important to automate it, because you can do dollar cost averaging on your own. You can sit down every Friday at 11 o'clock and do your trade. And if you do this like rigorously every week, it's the same time, the same amount, then that's fine. But guess what? People are not able to do this. People are not rational and disciplined creatures. So
Yeah.
what they do is, okay, it's Friday. I will do it later, or I will do, it's a good time now. I will put more in. And then the other days, no, the price is not good.
Yeah.
I'm gonna skip this investment. And then sometimes you're too lazy and you skip, or you whatever. The people are not designed to do that. Machines can do that. Apps can do that very well. So that's why it's good to automate. So you can't also get into these frenzies and FOMO. Oh, I need to buy more now. No, I need to sell now. Panic selling and stuff like that. This is what's going to make you poor. What's going to make you rich in the long run is really the consistency, and that's why you should automate it with a tool.
Yeah, take away the human factors. And also, like in the app, there is no possibility for someone to place an order with a fixed price. So it just, I like that, because when I buy myself dollar cost averaging, like you said, sometimes I was like, yeah, but last month the price is slightly lower. Maybe I just place my price order like same as last month, but in the end the order is never fulfilled. Then the price keeps going up, and I never fulfill my order this month. Then the call,
this sucks, makes you crazy,
yeah,
right?
then the DCA doesn't work. Yeah, so I like
exactly, and you never know where the price is going. You can't anticipate, you can't speculate on this. If you get into this mode, you think you can be active and you think you can hit the best price and everything, then it makes you go crazy. You won't sleep at night. You will check the price every day, and you will have fun if it works, but you will be sad when it doesn't. It's like in a casino, it's always one you will win at one point, you will lose at one point, and in the end you basically be at nothing, and you've spent a lot of time that you could have spent more wisely.
Yeah, unfortunately, not everybody understands the basic principles of investing. So not trading, but investing. I'm glad that you introduced this app, and then with a little bit more education, I think for those who are used to, invest in cryptocurrency or equities, they think about trading. But if you think long term, that with high probability you will make profit is dollar cost averaging, and then automate it. Actually, I'm very interested in how you, as a management consultant, got into the topics of investing, personal finance, because from our experience, because we have this fast track money course, that people don't learn this at home if they don't have a banker parents, or they don't learn it in school because no one teaches you. Where did you get this knowledge from?
That's a good point. Same here. So I didn't really have this education from school or my parents. I think it should actually be in the curriculum of school very early on, like from first grade. People should learn how to deal with money. The kids learn everything, but not how to deal with money at all. First time I maybe got interested in this probably when I got to university, when I was like 20. And this is way too late. You should start earlier with doing this. And I had some, obviously then, because I studied business administration, I had some finance courses, and I got kind of interested in it. But also in the university itself was not really the courses there, or what we've learned there was not really practical advice. It was not something you could really use for your personal finance or investment strategy. It was more like corporate finance and stuff like that. But at least it gave me basic. And then I met some cool people, and some friends of mine really started with this. So I learned a lot from them. Just trial and error, basically, see what works, see what doesn't, doing a lot of research. Today with Google, you have a plethora of information for any stock you can imagine, about any investment opportunity, about every asset, about every crypto asset, about Bitcoin, about all the investment strategies that there are, pros and cons. You have all the information. So you can do a lot of research yourself. That's also what I did. And there are a lot of good books from great people, like Warren Buffett, who spent his whole life investing. They've learned a lot, obviously, and they share it in their books. So that's what I did. And what I would also advise to a lot of people is to get into it as early as possible, and start maybe also doing courses like the one you do, or talking to friends, and do trial and error, like invest a little bit of your money just to try how it works, and to read a lot, doing your own research, and read a lot of books about this. That's how I get into it.
Yeah,
but you need to have this basic interest. Most people, I would even say, probably also don't really have this interest. They don't really like this topic of money.
I was saying Oh, I would say like awareness, because for example, we went to school and then we were taught how to, get qualification skills and find a job and increase your salary, be more employable. So that's the one from the earning side. But we were never aware that, okay, we also need to pay attention to the saving side and investing side. You imagine like a bucket and then there's a hose. We were educated in a way that we need to find faucet like to fill the water in the bucket, but we never realized like how to patch all the holes in the bucket. Because I was one of those professionals who always focus on earning. Okay, if I want to be rich, I need to earn more, but at the end of the day, no, if I just pay attention to your spendings, living below your means, invest smartly, like the DCA, BTC. By the way, this is not investment suggestion, advice. Don't take it, do your own research. I think you can achieve the same results without working 20 hours per day.
It's a very important point you're making. And the basic principle below this is that earning with working is less profitable than investing. So owning capital will always gain you more interest than just earning the money. It's a basic principle. Unfortunately, like the people who have money make more money by just investing it correctly than people who don't have money working and spending. So you need to get into this mode where you at least like 20% of your income you invest in assets. That's what Rich Dad Poor Dad, this book tells you so nicely.
So exactly what you talk about actually is the concept from Rich Dad Poor Dad, the cash flow quadrant. Is you are employee, then you exchange your time for money, and then you become self-employed, the S, then you also exchange your time for money, maybe but you paid a little bit more hourly rate because you need to cover your business expense. And then you have this business mode. The business owner is employees become more money because you have a system, more people working for you generate more cash flow. And then the last one is like investors, is you have more money and then the money generates more money. So the employee and self-employed quadrant, if you're there, is you are exchanging your time, but your time is limited. 24 hours is 24 hours. You cannot have 50 hours per day. But if you take yourself out from that quadrant to put in which most people can achieve by using your savings, investing, with Relai again, that actually is your money, or your Bitcoin creates more Bitcoin. Oh no, your Bitcoin creates more money for you.
That's a very basic principle that people should understand. And you can start so small, A lot of people also think, I don't have money, so I can't start investing. Yeah, you do earn some money. So in Switzerland, the savings rate average is 20%. So people actually take a fifth of what they earn and put it into savings, which is great. The problem is 2/3 of them are putting it on a savings account where you have
what's the interest rate of savings account?
0.00005% or something. It's really ridiculous. It's zero. There's no interest rate. There's even negative interest rate from 100,000 on. They take 1%. Negative interest rate. Yeah. So there's negative interest rates, there's no interest rate positive, and there's banking fees, obviously, that we neglect a lot of times, and also there's inflation. In Switzerland, it's not that bad. It's maybe 1% to 2%, but still, you're losing money your money loses purchasing power every year. And in other countries, it's crazy. Like in Germany, it's starting now, in a lot of European countries, and in the US, I think last month, in July, they had like 5% of inflation. Yes. That's a lot. Your money is basically losing 5% of its purchasing power. You should start early. And people say, okay, I don't have money. Yes, you do earn some money. And just start with $10 a week, and then maybe $10 a day. And then, you in the end, you will end up with if you earn 5K, then you put 1K per month into some good investment, and then you let it flow. And after 1 or 2 years, you will also already find, wow. And then the more you have to invest, and it's an ongoing thing. And with interest rates and everything, this is accumulating. So you need to start somewhere. You should start now, basically now. Stop listening to this and start.
Start now. Actually, like you said earlier, including me, everyone who understands how personal finance, how investing, how compound works, everyone, they said, I wish I should have started earlier.
With Bitcoin the same. Everybody's like, it's too late now. I wish I started when you told me first, Julian, in 2015. and 16 and 17 and 18 and 19, because I tell everybody just invest in Bitcoin. And there are still people now, after 6 years, they say, I should have started when you told me, but now it's too late. But that's what they said back then as well. They said, it's too late. Would have been cool if I started 1 or 2 years ago when Bitcoin was at $10. Now it's at 500. It's too late. Now it's at 50K, and they say it's too late. It's going to be 500,000 at one point, and they say, now it's too late. Just start. You have nothing to lose. If you don't invest more than you can lose, obviously, but start investing a little bit, and it's getting more and more.
Yeah, so that's very amazing. And then besides cryptocurrency, if I may ask, do you also invest in other assets? What's your investment philosophy?
Mm-hmm. Yeah, that's a good question. For too long, also, I didn't really have diversified portfolio and stuff, but now I have kind of a crypto portfolio. 80 or even 90% of this is Bitcoin, and I would say more than half of what I invest in is Bitcoin. More than half of my kind of wealth. It's very small. I don't have a lot of money, but what I have, more than 50%.
Not yet.
not investable money, at least. And then I started a stock portfolio like 1 or 2 years ago, where I also do dollar cost average. I put $100 per week into this portfolio and $100 per week into Bitcoin. Then I have some other small cryptocurrencies, but only like experiments. And so I do dollar cost average into Bitcoin, into stocks. With stocks, I'm basically stock picking, just some that I like, some dividend cases that give a lot of dividends, or just growth stocks, tech stocks that I like, or different industries that I like. It's basically stock picking. And then I will start a third pillar investment soon. Still didn't.
No, you should start now. Third pillar.
I will. I just don't like the fact that it can't access the money for a long time. But it is a good thing because of the tax reduction and.
But it prevents you from touching it.
Right. That's maybe it's a feature, not a bug. That's true.
I did so much research on third pillar. I even wrote articles, 3A, 3B, as like a really amazing. If you really don't need the money to spend, everyone should start third pillar, because literally because now you can use third pillar to invest in ETF. And if you invest in, let's say, up till you retire, I don't know, 20, 30 years later, most likely you can really accumulate 1 million in your third pillar. And on top of that, if you reinvest all the tax money you save, I don't know which canton you live in, it's another couple 100,000. So it's really crazy. But if you want to invest in real estate, a few years down the road, you can even use your third pillar for that. So actually, it's not money you cannot use. You can still deploy it, and you can use indirect amortization. Okay, I don't want to bore the audience here, but yes, do it.
Yeah, I also think so. I mean, these are probably the three kind of areas I want to have investments in: Bitcoin, some stocks, some stock portfolio, and the third pillar. And then at one point, if I have some more money, then I would probably go into real estate as well.
Yeah. Okay. I think that will be very soon if we have this positive outlook on Bitcoin.
Hopefully.
Yeah.
What about you? What is would you agree with kind of this setup, or do you have anything that I missed?
I think it's, I mean, because we are more in the same, I don't know, industry or, investment, or I don't know, generation. I think I would also do the same. So like real estate and equities and cryptocurrency. Probably I don't do stocks picking. I mean, I just buy ETFs because it's too much brain work for me to pick and then to bet. I just buy the market and then I do DCA and I don't care.
Yeah, I think that makes perfect sense as well. Yeah, I kind of also maybe like the adrenaline a little bit, or like, I don't know, I like to pick the stocks. I also like to do some research on them and stuff. That's it's probably more like a hobby, but as a normal person, I would also say definitely just do ETFs. You're not doing nothing wrong. You will have a couple of percent up to like 10% or 15% per year. So what else do you want, right? It's great.
Yeah, indeed. I would say, just for the audience information, like, we don't really advise you to do anything. Do your own research, try to understand what investment you want to invest and what's the risks involved. So it's all personal. And what we talk here is just basically we exchange information with each other, right?
Absolutely. I would be the wrong person to give investment advice for sure.
Back to the Bitcoin DCA. So I think yesterday I downloaded Relay and I started to trying out the DCA. And I was so surprised because I started this process before I realized, oh, I already started it. You know how fast it is? Like once you finish the whole process, I already finished. There's no like my name, my gender, my address, like nothing. It's just, what do you want to do? Frequency. Here's the bank account, transfer this money, and then done. And then just let the app do the work. It's really amazing.
Yeah, that was the goal. And a lot of controversy, actually. We have a lot of discussions internally, but also externally with users and stuff, because for some people, this is too fast. Some people feel like, oh, is this even secure? Like they don't trust it because they think, this can't be real, because why would all the other apps need all this information? Because people then kind of feel in a weird way, they feel secure if they have given some information. It doesn't change anything, but like people feel like, okay, if I create an account, this must be secure. Banks, you do that, so they think in apps you need to do that as well. But we found a solution how we can circumvent that, and I personally think this is great. I really liked this kind of a short, fast onboarding, and I like to use anonymous services. It's a pro and con, but it's good to hear from you. I'm basically on the same line. But how did you feel about, and that's a big problem still, we have a lot of users that feel like, okay, now it's done, I did the process, and then they do not actually pay. Did you kind of understand, oh, I have to go and pay now?
Yeah, because I have to go to my iBanking and make the transfer. But what I like it more, I don't know if it's possible, is like link to the credit card and do auto deduction, which yes. I was doing with another trading for equity investments, DCA.
Yep, absolutely. This is on the horizon. We do have this on the roadmap. It should even go live by the end of this year, or certainly beginning next year. That's something that's very important, because it would make it easier for people. Right now, they have to leave the app and log into the e-bank and copy some information, the payment message and everything. So that's kind of still a hassle. It's easy, but it's still kind of a hassle. It would be way easier if you could just put in your credit card or pay with Twint, for example. This is something we're working on. Yeah, absolutely.
It's against a human behavior. It's like you make it easy for them to invest long term, but people's behavior coming to, oh, I have to give my money away that I don't see the return immediately. It's always a little bit barrier. I have one last question for today's session. It was really a great chat. It's about entrepreneurship. Since you started this company a couple of years ago, what would you say is like the most challenging thing for you in being an entrepreneur?
It was right at the beginning. I feel like it gets proportionally easier with time. The longer you stick with a project, the easier it gets. The really big hurdles and big problems and big pains were right at the beginning, in the first couple of months, because you're really looking for, so you have a problem and you have a passion for it and you have a vision how you could solve it and you have a solution in mind, and then you start. You get excited, but then all the problems are coming until you did your first steps. If you run a marathon, also the first step is the hardest, and then you do the second and that, and it always gets easier. And at the beginning, there were a lot of things that were really hard. The hardest was probably to get the first support from other people, because you can't do this alone, right? Maybe the entrepreneur is the one who gets, the Hail Mary at the end, and he did this all on his own. No. This is always a big group project. You can do shit on your own. So you need people to support you. You need to sell the vision, and it needs to make sense to people. And you will hear a lot of no's. Like everybody thinks like, oh, you're crazy. This is never going to work. This is stupid. Do something else with your time. You will hear a lot of this, a lot of negativity. And in that negativity, to still keep going with your vision and get some supporters. These are different people you need. You need co-founders, and then you need partners, and then you need investors, and then at one point you need employees, and then you need more of all of them. This is the hardest part, I guess. And for us specifically, the hardest was to get our first fundraising. So in the meantime, this was our third fundraising, and we always basically 10x'd. So we started with the 20,000 Swiss francs that we raised. This is really not a lot of money.
It's the money for you to register again. They are limited liability company.
Exactly. We needed to raise this money to actually finance the development of the first app. And it was really hard. Like I talked to more than 100 angel investors, and some of them, the watch that they had was probably more than 20K. So they had money, but they wouldn't give it to me because they wouldn't believe in the vision. It took me like 3-4 months to raise this 20K, and obviously within 3 months we burned it on salaries for developer and stuff. And then we launched the app, and it went live, and it was cool. People liked it. They started investing, so we kind of hit the nail. But then it took another 3-4 months to do the next fundraising, and for this time we just basically worked for free. My co-founder and I, he was programming, I was doing all the business stuff and marketing and fundraising and stuff for free for a couple of months. We didn't have any salary, and this was hard, really hard, to not being able to pay a good friend who helped me with this, the co-founder. And then again, so many discussions to raise 200K. We then finalized the 200K round with different angel investors, I think in October or something last year. And this was also very, very hard, but a little bit easier already, I must say, which is the paradox, right? It's strange to raise 200K is easier than to raise 20K. But it was because you're already a step ahead. And now,
because you have the app, or?
We already had the app. We had first good numbers. We could show, hey, we already have more than 1,000 users. We already earned a couple of $100, so people are willing to pay. So it's easier for people to understand, okay, if I invest in this, then it's probably gonna be worth more in a year if they go on like this. So the more you prove your case, the more you de-risk the case for your investors. And what the investors do not like is risk, right? That's why it's so hard at the beginning, because at the beginning everything is risk. They basically just invest in you and the idea, and everything else is uncertain. And so the more you can decrease this uncertainty towards the investor, the more willing they will be to give you money. And that's what we did. So we grew further, we grew a team, we grew the user base, we grew the volumes and revenues. So by beginning of this year, we already had like 2 million in volume per month, and we made like 30 to 40K in revenue per month and stuff like that. And we had a team of like 3-4 full-time employees. So this de-risked it. It made it even a little bit easier. Obviously, it's still very, very hard, but even easier again to raise these 2.5 million Swiss francs, which is another 10K of what we did just a few months back. Strangely, it's getting easier, and that beginning is very, very hard. But still, the hardest part, I would say, is the fundraising, because that's the fuel you need to support everything else. If you cannot fundraise, then the business will die. You will not make your journey. Like it's like the fuel you need for a car. If you don't have fuel, the car will just stop running.
Even though you said the whole story in like a couple minutes, but I'm sure the work you put into it, the challenge and the resilience that you showed, it's beyond, those few words. It sounds very short, but the work behind it is tremendous. Thank you so much for being here, and really nice chatting with you. Do you have any last message to our audience?
Thank you very much, Yazzie. It was really, really a pleasure. You're doing a great job. This is really a very helpful podcast for the people who are listening to it. We will be happy to share those in our community, because I think it's important for people to think about investing and saving. Because as said, in the traditional, just saving in the traditional sense doesn't work anymore. Just putting some money aside and some cash under your mattress or some fiat money on your bank account, this does not work anymore, unfortunately, and it will be less and less, it will make less sense in the next few years. My advice would also be, it's important to get into it a little bit. You don't have to become a professor in investing, but you should get educated and do courses like the one from us, and listen to podcasts and different, reading books. Get started with investing, and it's easy. It's easy to start. There are easy solutions out there, just that you don't really have an excuse. So start now. Start now.
Thank you so much for being here, Julian.
Thank you, Yazzie. It was a pleasure.
I hope you enjoyed this episode of Fast Track Podcast. Show me your support by liking this episode and sharing it with your friends. Join the Facebook group at Fast Track Podcast 1, or you can find us on Instagram, YouTube, and of course the homepage fasttrack.life. See you in the next episode.